Hey, everybody, I'm Toby Smith. I'm filling in for David Asman tonight. Look, investors took a beating in August. There's no messing around here. All the major indexes were down 4 to 6%. So the question on everyone's mind is, hey, is September going to get any better? That's what we're going to do tonight. We're going to break it down for you right now. We have some of the best minds of the world in investing to give us some answers here. With us, Mark Matson, the CEO of Matson Money. Rodney Johnson's the president of HS Dent, co-author of the upcoming book, The Great Crash Ahead. I guess we know where he stands. And Peter Schiff, CEO of the brokerage firm Euro Pacific Capital. And he's the author of the little book of Bull Moves. All right, gentlemen, let's get to it. Here's the deal. If you boil this topic down to the core, right, even in weak economic data, it can be positive for stocks if investors basically are already braced for disaster. I mean, with so many bears out there, it took us all day to find one bull. Isn't the bad news priced in, guys? Come on, Mr. Matson, give me a little help here, Mark.
Hey, Tobin, I think I was a little bit mischaracterized. Although I am definitely bearish on Obamonomics here, I'm always a long-term bull. Last week was a perfect example. The market had a 17% slide off. And imagine this, at the beginning of the week, if you knew there was going to be a major hurricane, a major earthquake, Bernanke wasn't going to come out with QE3, who would have guessed that it would have gone up 8%? And the reality is, anyone that tells you they can predict where the market's going in the next 10 days or 20 days or even a month, they're lying. The market is random and unpredictable. You have to own it long term. Equity premiums only show up over 5, 10, 15, 20 years.
All right.
Stop trying to time it in the short term.
Hey, Peter, look at you made a living telling everybody what's going to happen. So what's going to happen here? I mean, I'm not trying to ask, isn't this bad news?
First of all, the Bears have been getting beaten up for 11 years now. So, it's a long wait for things to turn around. 11 years ago, the Dow was worth 43 ounces of gold. Now it's not even worth 7. And, if we get quantitative easing, that's bad for the economy, and it's bad for the real value of stocks. Sure, if we print enough money, prices will go up for stocks, but in real terms, in terms of gold, the value of U.S. stocks is going to continue to fall. And certainly when measured in other currencies like the Swiss franc, U.S. stocks have got nowhere to go but down. And investors have to understand that they need protection from inflation, from the Fed and from Obama. They're not going to get it in U.S. stocks. They're certainly not going to get it in treasuries.
All right, Peter, so we're off from the March 2009 low. 75%, 65%.
Not in terms of gold. We made a new low.
But I don't spend money in gold.
Priced in gold.
I don't buy my groceries in gold. I buy my groceries with dollars. Come on, let's stay with it. Let's stay with it. All right, now look at Rodney. Yeah, Rodney, you're also a guy who, I know you have this book that the world's coming to an end and we have a crash. Isn't all this bad news priced in?
No, absolutely not. People keep looking and they want things to be positive. There's a bent to our minds to be positive because that's where our portfolios are. People are hoping that things go up, and that hope and change kind of knows how that got in there. People are hoping that something's going to come out that's going to make it very positive and they're going to be able to make money in the markets. And unfortunately, they're wrong. We're looking at the next several years. We don't have anything but a lot of deleveraging and difficult times to deal with as we go through the contraction of the credit bubble that we had. And so, unfortunately, it's not a pretty picture in the equity markets for quite some time.
All right, but look, guys, look at the 800-pound gorillas in the room, right? We have the state of the Eurozone and its banks. That's one issue. Yeah. We have the state of United States and our economy. And then maybe the third one here is we have this, government disaster in Washington going on. But that bad news, we sort of went through it. We had these markets go up and up and down and up and down and up and down. Peter, if someone's going to be investing here, their 401k, their IRA, et cetera, in September, this is sort of the crunch time, right? Because, you could make a decision. Maybe I just want to go to cash and, put my thumb in my mouth and buy gold. Maybe I want to buy stock. Why wouldn't I want to buy a company like IBM that's growing its earnings, 15% a year and is selling for 10 times its earnings? I mean, there are a lot of cheap stocks out there.
If you've got a longer time horizon, I'd rather buy IBM than own U.S. dollars. But those aren't the only two choices in the world. I'd much rather buy stocks outside the U.S. that have better valuations, higher dividend yields, that don't have Obama to deal with, that don't have our Congress, that don't have Ben Bernanke. People have got to protect themselves from the real threats, which is massive money printing, inflation, and a U.S. economy that is never going to recover until the government does the exact opposite of what it's been doing. We need higher interest rates. We need less government. We need fewer regulations. Unfortunately, we're not getting that. And, Tobin, you actually can buy groceries with gold. I own a bank. offshore. It's Euro Pacific Bank Limited, and we're about to launch the world's first ever gold-backed MasterCard. So my clients can take their MasterCard into the supermarket and buy groceries with gold.
Well, now, see, I like it. You've been talking about that for about 10 years, Peter, so I like that. So, well, what would you buy now here? I mean, what do you're a European guy. European banks, everything else is in the tank. Japan is going nowhere.
Europe is look, it's no picnic over there either, but, we are investing in a lot of countries that aren't in Europe. There's a whole world out there besides the United States and Europe. Yeah. And within Europe, look at Scandinavia. Look at what's going on in Norway and Sweden. And look at Switzerland. So it's not all about the Eurozone. Look outside. Look at Australia. Just look to the north of Canada. There's a lot of opportunities up there. New Zealand. Look at Singapore. Look at Hong Kong. There are plenty of places to invest.
I get it now. Hang on, Mark. Tell me what you're buying. What would I be buying with cash in September before Peter takes all the oxygen out of the room here?
So when we did an analysis of over 10,000 portfolios, and we found today the average investor is 70% fixed in cash, only 30% in equities. If we went back 5 years ago, we'd see the exact opposite. 80% equities, only 20% in cash and fixed income. Largely from these predictions, from demographics, that the Dow was going to go to 40,000 by 1995. Obviously didn't happen. And then the reverse, everyone's predicting Armageddon because it's fashionable. The reality is, yes, you should build a globally diversified portfolio, but don't bet that U.S. is going to get tanked and only Europe is going to do well, or China, or Asia. You have to have both. We have over 45 different countries specializing in micro-cap stocks and high book-to-market value stocks. That's where the premiums are going forward. Don't get caught trying to time it.
All right, Rodney, let me read something.
And I'm going to be interested in taking some gold and trying to buy some stuff at Walmart. I'm going to see how that goes.
Don't get Schiff started on this.
Well, you can do it with my credit card.
I know, his credit card. God, I paying Peter Schiff every time I use my credit card. That would drive me nuts. All right, look, I'm going to read this one from Goldman Sachs out today. They said, and I quote, sort of, here we go again, solving a debt problem with more debt, which has not solved the underlying problem. Can the U.S. continue to depreciate the world's base currency? Rodney, can the U.S. continue to depreciate the world's base currency?
Well, they could, but they, of course, ruin everything, and they're not going to do it. I very much disagree with Schiff on where we're headed here, because we think you're going to see a flock to the United States. We have done everything we can to devalue the dollar. We've worked on it pretty well. You can buy things at the grocery store, as you mentioned, with U.S. dollars, but they cost more than they did a couple of years ago. Yeah. We think that's about to change because people are so worried about the European banks and the Eurozone, and they should be. And where are you going to put your money? Where are big blocks of money going to go? And we believe they're going to come back here over the next couple of years as we go through the next leg down of this economy.
Peter,
because there's nowhere
why would you
for
jump
this money
out of the
to
frying
go.
pan into the fire? It makes no sense.
Yeah, Peter, let it go, but
where else
no
are you
more
going to
ads
hide
for
the
card.
money?
Yeah, Peter, what do you respond to this guy? You think we're going to heck in a handbasket? Come on, let it go.
Well, look, we're in a depression. But a year from now, unemployment is going to be a lot higher than it is today. They might be launching QE4.
How much?
They're going to keep on printing, and they have to keep interest rates at zero. We now have so much debt that if interest rates just went up to a historically normal level, the government would have to default on the debt. All the banks would fail. We are so addicted to cheap money that we can't kick the habit. We're going to destroy the currency, and the dollar will no longer be the world's reserve currency.
Well, you can't buy
the world will go back to gold. It makes a lot more sense to have real money backing currency than nothing.
We're never going back to gold.
There's a lot of options between the dollar and gold if people want something else, but de facto, people are not going to flock to the dollar just because they don't like the euro.
All right, Mark.
No, it's because they can't stand the euro and don't trust the euro. And where are you going to go? To the yen? And you're never going to gold.
I'm telling you, why do I want to own the euro?
I mean,
this is a country that can't even have a currency. They don't have a common world.
Meanwhile,
why would I want to own
the euro? Is going up.
The
dollar is actually going down against the euro, despite all those problems.
Mark, give us some sanity here. Give me something to buy. I don't want to buy gold and put it in my sock drawer. Give me something to buy.
Why not? If you'd have done that for the last 10 years, you'd have a lot more money in that sock drawer.
I'd have a lot more socks. I know that.
Look, the reality is that I hear a lot of times that equities have been dead over the last.
Buy some Chinese stock.
I hear a lot out there that equities have been dead for the last 10 years. It's just not true. They haven't. Microcap stocks are up 10%
stocks
per year over the last 10 years.
Look at Ron Paul's portfolio.
Europe, small value international stocks up 12%. Emerging market stocks up 15%. The problem with most investors is they're so myopically focused on which way does the Dow going to go, they don't bother to build a truly globally diversified portfolio. Yeah. You should have at least doubled your money over the last 10 years if you had a diversified portfolio.
All right, well, listen. You gentlemen all been great. We've actually solved nothing so far, so I'm going to have some of you back. All right, good. Thanks for coming out. All right, on deck, ladies and gentlemen.